Would you like an opinion on a financial matter you're dealing with? Whether it's about retirement, investments, taxes, or 401ks, Scott Hansen and Pat McClain would like to help you by answering your call. To join Allworth's Money Matters, call now at 833-99-WORTH. That's 833-99-WORTH.
Welcome to Allworth's Money Matters. Scott Hansen.
Pat McClain.
Glad you are with us as we talk about financial matters. Both myself and my co-host here, we're both financial advisors, certified financial planner, chartered financial consultant. We spend our weekdays with people like yourself, helping them plan their futures, and broadcast on the weekends to be your financial advisors on the air. And a lot of our program is focused on people who've worked hard, saved well, and want to make sure that they maintain their financial independence throughout their life.
Yeah. And many would like to be rich, but more importantly, they don't want to be poor.
Both very subjective terms.
I guess it is, especially in a especially in a first world country versus a third world country, right?
Yes.
Very, very subjective.
Yes.
That's a good point. A good point.
Because who was I talking to the other day? Like, we tend to eat out quite often as a family. I like eating out as a family because I hate doing dishes. I don't like cooking particularly. And there's something nice if you're all in a booth. You're an hour together and it's a good time, and you leave and you don't have to do the dishes.
Okay.
Right? That's what I like about it. But like growing up, on a birthday, would go out to dinner. And that's pretty much it. We didn't go out to dinner. But now it's just such a different. So the concept of riches and poverty, like,
it changes. It's a moving target, right?
Yes.
Yeah, remember. Yeah, going out. We would go out 2 to 3 times a year, normally after church on Sunday when we went out. We'd eat at one of 2 places, and all you could eat with buffet. There were 5 kids, 4 of them boys, and all you could eat buffet. Or my dad would bring us to a bowling alley, and we would eat at this little cafe in the bowling alley. Yeah. I don't know why, but maybe it was really cheap and good. I don't know. But, when you're 6 or 7, any pancake's good.
Oh, for breakfast? Is after church?
Just for breakfast after church, yeah.
And then would they give you some change until you get another pack of cigarettes, go to the machine and pull the knob? Because my parents used to do that. Give me a pack of the marbles, would you there, Sonny? It's fun. You got to put the coins in. Out comes the pretty red box. And I'd crawl back to the table and get back in the high chair.
Your dad. That's funny.
Anyway, this is a financial show, and let's take some calls. 833-99-WORTH to be part of our program. And we always love taking calls because they're always so interesting, and you never know what you're going to get. And we don't tend to we don't do any time doing any research ahead of time. We just what's the call? And let's
see where it goes.
See where it goes. And that makes it fun for us as well. 833-99-WORTH is that contact number if you've got a question for us. And we're going to start off with Craig. Craig, you're with Allworth's Money Matters.
Thank you. Thank you for taking my call. Quick question. I've got about 4 more years till I'm going to have to retire at 65. And I was just seeing basically if I got to start looking for another line of work after that, or if I'm on the trajectory to at least enjoy my golden years, so to speak.
Are you a pilot or something?
Yeah, I was going to ask the same
65?
question.
Forced retirement?
Yeah, that's.
Oh, you are?
Exactly.
I was going to ask exactly the same question, Scott, because it's very rare that you see a forced retirement. And by the way,
I know somebody that were forced retirement at age 58, air traffic controller.
Oh,
58.
Well, I think that's probably been moved up a little bit. And it was
No, this is 2 years ago.
Really?
Yes.
It wouldn't surprise me to see with the pilot shortage that's going on right now if the airlines don't lobby for a little bit of an extension on the age 65.
Oh, that'd be nice.
Well, who knows?
Can you advocate for that?
Yeah, I could advocate for anything you
They'll
want.
start bringing the retirees back into flying.
Yeah.
Recalling the retired workers. Get the 84-year-old out to come get back, retrain back in seats. Is that what you'd like to see, Pat?
That's not funny. All right, so what's your financial situation look like? How much of a pension will you be receiving?
Well, I won't receive any pension from the airlines. I do have $40,000 after tax from the government, and then I'll have currently I checked it out. I got the 875 in my 401k, and I have 750 in my IRAs. I have a 250 in my Roth and 500,000 in my traditional IRA, and then I have some other savings, cash, just basically money in the bank. I have no bills. House is paid off, worth about $750,000, and that's where I'm at.
Are you supporting any children?
My daughter turned 18 and decided I'm not smart, so she moved out of the house.
Oh, perfect. Well, I don't know if that's perfect. Maybe it's perfect.
She'll come back, but she does have a good job.
What's your approximate income now?
Approximately is $180,000.
Say that again.
$180,000 a year, approximately. It varies month to month, it seems like lately.
And what was, just out of curiosity, this last year during the pandemic, when I'm sure you weren't working much, what happened to your pay then? What happened to the pay of most pilots?
It went down. I went from, I had some months where I was $10,000 a month, and I had one month when I was $18,000. So, like I say, it's been varying quite a bit. So I estimated on the low side at 180, because, like I say, it's been going back and forth this last whole year.
And you're Social Security eligible. So here's what.
And the $40,000 after tax, is that from the Pension Benefit Guarantee Corporation?
No, that's from the United States Air Force.
Got it.
Oh, got it. Thank you for your service.
So,
and you're already receiving that today? You're receiving that now, or you will at 65?
No, I'm receiving that today.
Okay.
Got
and
it.
the reason I ask is, before I'm thinking, okay, we have 180,000 to replace. Well, we already have 40, so now we only need 140. But now we're looking at it's 220,000 of income we need to replace.
but we're really only going to replace the 180 because the 40 is just a push, right? So you've got $2.375 million according to the numbers you shared with us, right?
No, it's 750 in IRA, broken down 250 in a Roth, and 500.
Oh, got it. Thank you. So 1.875 million.
No, 1.6. That's some change. 1.7.
Oh, I added something twice.
750.
Yep.
So can you retire? It depends on not replace 100% of your income.
I don't need to do that, I don't think.
How much income do you need to replace?
Well, right now I try and live on less than I make by a substantial amount. I try and live on like $9,000 a month, and even out of that I don't use it all because I always save for car problems.
But you're living on
So
that.
what do you have in the bank? What do you have in
the bank?
savings? Yeah.
Yes.
I got $60,000 cash.
So you are living on all of it, or your bank balance would be much higher. You're just not living on it month to month. It comes out in chunks. You buy a new car, redecorate the kitchen, do whatever, right? It's close. So I am going to direct you to our website. I want you to watch the webinar, 7 Personal Decision Points. And then you could do the calculation yourself.
I mean, look,
Okay.
if I were in your situation, 4 years away from retirement, I think it'd be worth your while to sit down with a financial advisor, run the numbers, look at what's realistic here. You got 4 more years for additional 401k contributions and for growth in those accounts. What are those going to be worth? What are some realistic withdrawal assumptions? Like, depending on how much equity exposure you have in those 401ks, what's kind of a ballpark assumption we could use going forward, considering you've got this military pension that has some cost of living adjustment on it. Social Security's got cost of living adjustment on it. We can take those into account. So, and run all this. So then we can say, all right, what's a realistic for Craig to have a 95% confidence in retirement? How much income can he have? And then you can start looking at, like, all right, what if I took a little bit more income? What's the probability of outcome? And give you.
So I was going to go exactly the same place Scott went, which was go to our website, watch the 7 Personal Decision Points, which is the financial planning process that we wrote, which I mean, Scott and I played a role in it as well as the rest of the Allworth group, wrote this planning software that actually shows where either you're over budget or under budget, you've got too much money or not enough, or you can come and visit an advisor, our advisor. Any decent advisor out there should be able to answer the question. But from what the information you gave us, this is not a slam dunk by any means.
Okay.
Let's say that it grew to $2 million and that we started a 5% distribution on that account or 4.5% distribution on that account. It's $90,000, right? That still puts us $90,000 short. Well, then you say, well, Social Security is going to give me, $2,500 a month or $3,000 a month. We're still short. But yours is close. It's on the border. I mean, it's not.
Now, how long has your house been paid off?
Last 4 years.
Okay.
Good.
So you had some additional expenditures then. I mean, look, you're in great shape, right? So what we're trying to do is how do we figure out how do we have the $220,000 a year still coming in retirement? And if that's not the reality, then what is reality? You don't have to go back to work. It's your choice, a lifestyle choice. I mean, if you want to take a couple international trips flying business class and staying at the Four Seasons, then you might need to go back to work.
Yeah, that's probably what he wants to do. Is climb.
I don't think that's what he wants to do.
He wants to climb back on a plane. He's like, man, I missed that plane.
Only if I got the big window seat.
Yeah, actually, and by the way, we actually, one of the divisions in our company, which is RAA Allworth, specialize working with pilots.
Go to RAA.com.
Yeah, RAA.com. So
there's a book from the right seat to the rear seat to the right.
Yeah, is that the right seat to the rear seat?
What's the captain? Where's the captain sit?
Left seat.
Oh,
left seat. It goes from the left seat to the rear seat.
We have is it a book?
We have a book.
It's a book called Left Seat to the Rear Seat that
Something
actually
like
talks
that.
about.
I should know the title.
Well, anyway, we have a division in our company that specializes in working with pilots.
Oh, yeah.
And many of them are actually retired. Hundreds and hundreds
and
of
the
pilots.
people there understand the benefits.
They understand the benefits. If you work for United, Delta, Southwest, any of the big carriers, they understand the benefits. So I would encourage you to reach out. That's a shameless promotion for our company.
It would be helpful. It's a good place to start,
right?
For dang sure, yeah. Because they understand the benefits so well. And appreciate the call, Craig.
But you and I personally don't understand those companies' specific benefits, like the people that work in our pilot division.
No, I don't.
Yeah.
Like, I don't know what the medical is or the life insurance after retirement
I don't either.
They would know all those things, but not me.
And they are part of the Allworth team.
They are part of the Allworth team, and we appreciate them. Let's talk with John. John, you're with Allworth's Money Matters.
Well, hello.
Hello, John.
Hey, I'm calling from Sacramento.
All right.
I love listening to you guys.
Thank you, sir.
I got a question. So my wife and I, we're older parents. We're in our late 50s. We're getting closer to retirement, but we happen to have a 7-year-old child. And I was wondering if there was a smart way to fund private high school for him. Like we could save for it, or other than just paying for it out of the bank.
Got it. You can use a 529 plan for it.
Yeah. Gross tax
529.
Yeah, because gross tax deferred if it's used for education expenses, typically for college, but it could be used for a private high school as well.
Yeah. So you would start putting money in there now. I'd probably take a pretty balanced approach in terms of the investment because you don't have that many years. So what grade is he in now?
He's in second grade.
And how old is your wife?
We're 58.
And you both work outside the home?
Yes, we both work outside the home. We're both school teachers, and then I teach college in the evening.
Nice.
And how much money do you have in your 403Bs between the two of you?
$700,000. So should we be? Well, lately I've been maxing out our contributions to our 403B, and I assume I should continue to do that.
And do you have enough free cash flow to start putting money into a 529 plan for your son?
I do. I do have some money to put into that. I was just wondering if I just didn't know if there was some special way that folks may have done that.
That is
so I thought I'd ask you guys.
That's the only methodology to actually fund those. It used to be for college only, post-secondary education, but now it's for all education, including private school, including faith-based schools. And I only say that because I am from Sacramento, and I am my children attended faith-based schools in Sacramento.
Well, that's what we're thinking about, a faith-based school.
And you've got either
school that starts with the letter J. Or?
Yeah. So anyway, yes, all three of my boys graduated from Jesuit. They are dear to my heart and close to my wallet. How's that? Excellent, excellent education, by the way.
It's not very common that people save for private high school, in part because the cost of college tends to be that much greater, and typically it's pay as you go. They pay out of current cash flow. I mean, the situation you're in, you're looking at retiring at some point in time, my guess.
Well, the child wasn't necessarily in the plan when we were,
I get it.
Thinking about the future. Look, so our plan has changed a lot recently. So I've done some things. I had lots of miscellaneous pieces of real estate which I recently liquidated and paid off. So I have two homes, but one home's now fully paid off, and the other home has a much smaller mortgage now, with the lower interest rates and doing those sorts of things. And now we're just starting to think about funding his high school and funding his college. Now.
And I'm going to agree with Scott. I answered your question that you can use the 529. I would concentrate less on the high school because of the cost associated with the high school is typically significantly less than cost of college.
But the 529, you can use it for whatever.
Yeah, correct. So you fund the 529.
You never know what happens with life, just like you weren't expecting to be late 50s with a 7-year-old.
So what happens is you fund the 529, and when his freshman year rolls around, you decide whether you want to use it or not, or you could just push it off to college. That's why you would start funding that today.
So
I do think that seems it is kind of prudent given this stage you're in life, because if suddenly you have to retire, which happens sometimes, right? Then you've got these expenses taken care of.
We think it's a good idea to fund the 529, whether you use it for Jesuit high school or not. And by the way, couldn't be happier with the education my children received at Jesuit high school.
Right on. Okay, well, that sounds like some awesome advice, guys.
All right, appreciate the call.
Yeah, wish you well, John.
All right,
and one more piece, really quick, while you're still there. If you or your wife retires whenever you retire, sign up for Social Security, at least one of you, early on, because once one of you on Social Security benefits, you'll receive benefits for your son as well.
Just one of you has to do it.
Just one of you.
Excellent point, Scott.
All right.
So even in your planning, it could be that
you say, well, I'm not going to take Social Security till I'm 65. You take it as quickly as you possibly can, as long as your child is a minority.
What happens if you take it and it's suspended? Let me think about that. What if you took it at 62? Because your income's too high, you give it back, so it ends up being suspended. But you get your son on Social Security.
Oh, you mean you pay it back?
Yeah.
I don't know whether you'd have to pay back your child's as well or not.
I doubt it. I don't know. That's what I would look into, though.
Well, let's wait till he gets to Social Security age, because that's 4 years from now, and the rules will be different for Social Security than they are today.
It might be, but that's something definitely consider.
Yeah. So call us back in 3.5 years and ask us the question whether you should take Social Security or not.
I will definitely do it. Well, no, my wife and I are both STRs, so we were running under the assumption that even though we had previous careers where we earned 40 quarters of Social Security, that we weren't likely to get any.
But you'll get something, a little amount. But what we're talking about is getting in because you have a dependent. Your dependent gets income
because you're on Social Security. So we've had clients.
Woo-hoo.
We have had clients that have had sole custody of grandchildren, nieces, nephews. We've had them adopt the child so that they get Social Security benefits for the child.
Got it.
Yeah, that's definitely something to look into.
I will definitely.
One more benefit of having children late in life.
Oh no, the benefit is I don't worry about stuff the way like all the young parents do.
Do you have older kids as well?
No. My wife woke up on her 50th birthday and said, "Oh darn, we forgot to have kids."
Okay, I don't think it happened just like that.
I'm 50. What have I done with my life?
I don't believe it happened just like that, but we're going to go with it. How's that?
All righty.
All right. Well, I'm sure it's a blessing. He's a blessing.
Oh, no kidding.
Life, kids certainly make life rich and interesting.
Oh, yes.
Even in the challenging moments.
Oh, yeah. So, yes. Like 4th of July last week, my kids were jockeying over who's going to have who over our house. Can I have these kids?
Your kids are they home for the summer? Is that what the deal
They
is?
came home for the 4th of July because they can, because they work remotely.
My son came home for a couple days. Well, he's used our place to stay for a day on the way up and back to Oregon for a paragliding competition. So he went to Boston College, which incidentally is Jesuit college. We're not Catholic, but it was that was actually a brilliant place for him.
Because he wasn't liberal enough going in?
Oh, he was less liberal leaving Boston College than he was when he went.
Really?
Oh, yeah.
Okay.
I mean, we had debates like, well, socialism hasn't really been tried properly, Dad. That's why.
Okay.
Like stuff, those sorts of things. Where am I going with this?
So he stopped to your house on his way to
yeah. So Boston College, private education. And by the way, when you plan for college costs, there's some, and I did pretty well. I had the 529 down pretty much to the penny.
Except
for the travel costs of going back and forth to Boston and the hotel and the rental car and the meals out. And then, because we live in the suburbs of Sacramento, there's not a lot of shopping, so my wife would like to.
Okay, and
go
so
to the
then that
store
just
today.
added to the cost?
Correct.
So-
But my point with all, so anyway, my son was Boston College. I thought he was going to study mathematics or computer science or something, but every kid chooses their own path. So he's a paragliding instructor in Santa Barbara now. And so he went to Oregon for a paragliding competition, which I didn't know there really was such a thing.
How'd he do?
He took second overall
Wow, that's pretty good.
out of 60 pilots.
Wow.
He's 23 years old. I'm like, son, you got a real career ahead of you there.
So just for a little bit of background, where did you go to college, Scott? Since we're talking about these private schools, where did you go to college?
First, I went to El Camino Junior College.
In Southern California?
Yes, to get my first couple years of education. And it took me a while because I had a little tree trimming business that I ran. And then I went to Chico State.
And mom and dad paid for?
Very little.
Sacramento State University myself, and mom and dad paid for nothing. So,
And in some aspects, that journey, I think for me, I learned a great deal. I learned a great deal by running a little business through junior college. I learned a great deal. That whole paying for figuring out how to pay for it all.
Yes,
it was a good experience.
So if people listening to the podcast or the show are thinking these pretentious,
pretentious.
Yeah, we're throwing away names like, private college, Jesuit schools, whatever. We worked for it. We don't have to apologize to anyone. Just to let you know that we didn't. I wasn't born on third base and thought I hit a triple.
I told my kids, this is a tremendous blessing.
It's
and
a blessing.
Gift. Like most people in the world do not have these opportunities.
That's right. And actually, my kids in college, I asked them all to work, and they do, because I think it's good for them.
Work during school?
Work during school.
I tried to get my son to do it. I said, I was excited. I've got lots of good plans for my kids.
Okay, do you?
Yeah, they don't always work out. I said, why don't you go work for the alumni and you can dial for dollars? They call and try to get you to give some money. And I just thought it'd be good sales training for him or something. How could that be bad for him? And he says, Dad, have you seen the lawns at Boston College, how green they are and how beautiful the grounds are? I can't in good conscience call people and ask them to give money so that we have even more in our billions foundation to keep the grass even greener than it is.
That was his response.
He says, of all the money, all the places for people to donate their money, I don't think it needs to go to Boston College.
What, he studied rhetoric? I mean, that is a beautiful argument. That was brilliant. Your son should be a lawyer. That was a brilliant argument.
Well, he can pay for law school on his own.
Okay.
After the winnings from his paragliding competitions.
There he goes.
Huh? That's going to cover it.
Oh, I hear they're big. Hear they're big.
It's a big sport. Lots of sponsorships.
Lots of sponsorship. The medical centers are sponsoring it.
I shouldn't tell you this.
Okay.
He actually gave him a nice trophy.
Oh, nice.
And this bottle of red wine, I don't know if it was because it was a heat wave when he was there and it got cooked or something. Honest to God, it was the worst tasting wine. We had dinner and I couldn't drink it. I said, I'm sorry. I went and opened another bottle. And my wife the next day says, couldn't she have at least pretended? I said, I don't think it cares about the wine. That was terrible wine. I don't know what that swill was.
Thanks for putting in all the hard work for this garbage bottle of wine, son.
Not like I opened a nice bottle. It's just I couldn't drink that stuff. Anyway. We're entertaining ourselves, so I hope you're finding this somewhat amusing. When we get back, we'll continue on with the calls. We'll talk to Preston. We'll talk to you as well. And to join the program, 833-99-WORTH. You're listening to Allworth's Money Matters with Scott Hansen and Pat McClain.
Can't get enough of Allworth's Money Matters? Visit allworthfinancial.com/radio to listen to the Money Matters podcast.
Welcome back to Allworth's Money Matters. Scott Hansen.
Pat McClain.
Glad you are hanging on the program in spite of us talking about stuff that has completely zero relation.
That was one of the negative reviews on when I was reading the podcast reviews. 99% said we like the fact that they're personal and share real life stories. And then 1% said they chatter too much about their personal lives. I wish they would just get onto the numbers.
Okay. Those people don't need to listen to the program. And they're probably not the kind of people I'd want to have dinner with.
Well, listen,
I'm just being real.
When they get their own radio show, they could talk about whenever they want.
It's easy to have a podcast.
Oh, it is. It is.
Do it in your bedroom, throw it out there on the World Wide Web. And people are lining up to download, downloading like crazy.
I do enjoy the podcast, so I must admit.
I have a friend who does a podcast, and there's a community of people. They subscribe to each other's podcasts to get the listener numbers up, but I don't think anyone actually listens to the programs.
Oh.
So there's X number of people all in some sort of community, and they subscribe to each other's podcasts.
To inflate each other's numbers.
Yes. But I don't think anyone actually listens to
It's a podcast farm.
Pretty much. All right, let's head back to the calls here. 833-99-WORTH is our contact number. We're talking with Preston. Preston, you're with Allworth's Money Matters.
Hi there. I'm from Washington State, but I'm actually calling from Argentina. How's it going?
Argentina. All right.
Yeah.
Are you in one of the major cities there, or are you out in the bush?
I'm 3 hours away from the capital, Buenos Aires.
All right.
I'm on the beach.
Oh, of course you are.
Nice.
Yeah. What can we do for you?
Of course you are on the beach.
Do you have a question about Bitcoin? Because that's what
it said here.
I'm asking about a Roth IRA early distribution. So I've already emptied the majority. I've emptied over $15,000 over 7 years from my Roth IRA, and on all of these early distributions, I've opted out of paying the 10% penalty because it's optional. And I'm asking if these are all early distributions, which, according to the IRS, I owe a penalty on, but because it was optional, I just did not pay the penalty.
How old are you? How old are you?
I'm 29.
Why do you want to get yourself into trouble with the IRS? I mean, of all people to have
but
it's not optional.
But the penalties wouldn't be that much. He's 29. How much growth could have taken place? It's not on the principal deposit. It's only on the growth, is it not? It's 5 years.
It's been there for 5 years.
For 5 years. Has it been there for 5 years?
I've only withdrawn the principal, not the growth.
Okay.
But the withdrawals I made, I have not been there. I've not used that money for college or buying.
No. You're allowed to take. As long as you've had it there for 5 years, you can take out your principal, your original deposits, without any penalty or taxes. It's after that. The bigger question I've got is, what in the world are you doing spending your retirement in your 20s so you can stay on the beach in Argentina?
Well, that's it really. Just to travel the world. I've dipped into that Roth IRA because I'd rather retire early, or I'd rather learn a couple languages. I speak 3 languages today, and
okay. That's why. So, what's your question for us? Is that your question?
That's it.
Yeah.
That's it. I mean, Should I be concerned? Do I owe taxes to the IRS?
If you owe anything, do you file a tax return?
Yes, I do.
And how much do you have in your Roth IRA?
Right now, I only have probably $4,000 left.
So when did you open the original Roth?
In 2014.
And when did you start taking withdrawals?
So I started taking withdrawals before 5 years was up.
Okay, well, you owe the money. You owe the penalty on it. I don't understand why you wouldn't just pay it.
Because it was optional, I figured.
Well, no.
What do you mean optional?
When you
Taxes
keep saying,
aren't optional.
I don't understand. You can withhold optionally. It's not whether you actually have to pay it or not. So when you take that withdrawal, you have an option to withhold taxes or to not withhold taxes. Yeah. So you go to the Roth IRA custody, and they say, Preston, you want $10,000. You go, yes, send me the $10,000. And then the second question is that you have the option to withhold taxes on this. President, do you want to withhold taxes on this? And you said no, correct?
Correct.
Okay, that is a withholding. It has nothing to do with your true tax obligation. The true tax obligation for all taxpayers, every taxpayer, takes place on the tax return, not on the withholdings. So you owe taxes. Just because you didn't withhold it, and just because the IRS the custodian didn't calculate it, doesn't absolve you of your sin of tax avoidance.
Sin? That's like a word you hear.
It doesn't. He's 29. I'm trying to make a point. It does not absolve you of your sin of tax avoidance. So what you may want to do is continue to ignore it. The chances of the IRS catching you.
No, they will, because they get notification of those things.
Over time, it will catch up with you.
They'll send you a letter,
and
it's real easy for them.
Okay.
It's not like working for someone who pays you under the table. You take money out of a Roth IRA, your IRA custodian sends a documentation to the IRS every year on what deposits or withdrawals were made from it.
So you need to go back and either amend the tax returns or figure out what the tax obligation you owe and then pay it.
Or stay out of the United States the rest of your life.
Which is, I don't think it's that high crimes and misdemeanors that he's had like
he's on the lam.
$10,000.
Dye the hair, put a grow mustache.
Why are you living in Argentina? I took money out of my Roth IRA without paying taxes. I'm running from
I owe $600.
I'm running from the law. You owe a few $100s. It's not a lot.
What is your long-term plan? So there's there's part of me that is like,
Good for you.
Like, right? I mean, good for you. And I'll tell you a quick story, Glenn. This is years ago. I had a client meeting with a husband and wife doing some planning for their retirement. And I asked about their kids. The husband and wife are maybe within 10 years of retirement, and they've got their 401k and their 403b, and they're working on their mortgages down, all this other stuff. And they're talking about their kids. And, oh, yeah, Johnny, whatever his name was, he's doing great. He's got this going on. He's putting 6% in his 401k. And Susie's got this and this and this. And well, we had this third kid. Well, I'm not even sure what countries he's in right now. I'm like, what do you mean? He's somewhere down in Latin America. He'll work like 6 weeks somewhere, save up enough money so he didn't have to work for the next 6 weeks. And then he'll travel around and he'll reach out every once in a while. And they tell me this whole story. And I said, he might be the one that has it figured out. We're sitting there all stressed out about your retirement. He's out there just living, right?
Yeah. And so Preston might be the smartest one in the room. Small room, but nonetheless. So anyway, you do have an issue there. You do need to address it because you confused the voluntary withholding with actually a legal tax obligation. So appreciate the call.
I would suggest finding other sources of income than your Roth IRA, because there will be a day when you are old.
Well, he's in Argentina. Maybe get a job as a gaucho.
Oh, because all the Argentinians are gauchos. Oh, how about why he's a tango dancer? He could be a gaucho or a tango dancer.
All right, appreciate the call.
You think you're pretty funny calling all Argentines. I grew up with some family friends from Argentina. Really interesting because they fled during the social unrest. I'm 54, so they were little kids when they fled, and families had prominent business people had to flee immediately during the time.
And left many of their assets behind.
I grew up drinking lots of mate.
Is that right? Which, by the way, when you look at how many the Russian wealthy people in Russia and China allocate their assets to real estate in foreign countries, let that remind you why they like to do that.
Let me ask you this. Would you be terrified living in Hong Kong these days?
100%.
Can you imagine?
Would you be buying, if you were well-to-do in Hong Kong, would you be buying real estate? Would you be liquidating your real estate assets and moving them ashore? And the reason real estate is different than a lot of assets, it's hard to relocate real estate back to the mother country. And you could obscure title relatively easily, which is...
It's just been amazing what happened with Hong Kong.
And by the way, I mean, that goes back. This is not something that new. It's just now it's actually come home to it's in the foreseeable future. But these were agreements that were made decades ago.
Which agreements you talk about?
Hong Kong returning to China.
Yeah, but it was supposed to be another 20 years or whatever it was.
It's coming close. That's right.
Well, it's still a long way off.
In some people's minds. Some people's minds, it's happening tomorrow. Which is obviously, that's the issue, right?
Well, they clearly have changed. They've taken away all the democratic freedoms that they had before.
Yes.
Really amazing. It's really amazing how quickly that's happened. Anyway, why are we talking about that? Let's continue calls here. We're talking with Glenn. Glenn, you're with Allworth's Money Matters.
Hi. I've got a 30-year fixed mortgage, and I was wondering, how do I go about getting my bank to lower the interest rate on that existing mortgage? I've heard there's a way to do that, and I was wondering what the process is to just get them to lower the interest rate on that existing.
What is the interest rate?
Oh, it's about a point. It's 1% above what it is now, probably.
Like 3.5%, 4%? What's the interest rate?
Yeah, around 4%.
Okay. And why don't you just refinance it?
I've been real pressed for time, and which is why I haven't got around to doing it. So I just thought that, well, this would be a lot faster.
Yeah. So here's how they work. So most mortgages are sold in the secondary market, backed by governmental agencies, and they're a part of somebody's portfolio. So a bank might be the servicing agent, and you see the bank's name on it, but odds are it's not part of their portfolio any longer.
It could be owned by a mutual fund. It can be owned by a pension plan. It can be owned by an
individual.
Yeah, any number of different institutions. And there might be multiple people that own the same mortgage.
There are times when the bank will portfolio the mortgage and hold it on its balance sheet, but that's pretty rare. So you can call your bank and say, look, I want to refinance, but they're probably like, can you just lower the rate? Odds are they're not going to be able to.
Just because they don't have the mechanism to do that. They don't own the paper itself. Right? They are just the servicer. And part of that payment that you make every month pays them to be the servicer. So how's your credit?
Oh, excellent.
And what's the value of the home?
Maybe $400,000.
And what do you owe on it?
Less than $200,000.
And how much money do you have in the bank?
Oh, about $10,000.
And how old are you?
Getting close to 60.
I would get a new 30-year mortgage, and I would call a local mortgage broker. In fact, if you give your number out right now, I bet you no less than 10 will call you in the next 3 minutes.
And they'll call you regarding your warranty that's just about to expire.
Yes. So if you want, you have that option as well. If you don't want to look a mortgage broker up, we could just give your number out. But there are many great mortgage brokers. And you're calling from what area?
Sacramento County.
Easy. There's dozens and dozens and dozens and dozens. And by the way, it isn't the mortgage of old. They're pretty streamlined. They go through pretty quick. It's not going to take a tremendous amount of time. All righty.
It's worth
it.
Yeah.
Appreciate the call.
Save you $2,000 a year in interest.
Yeah. Significant.
Rates are about 3% roughly today.
Yeah.
Somewhere right on the thing. I expect things can't get any crazier. Now you can bet on Bitcoin in your IRA, and some are pushing for your 401k. And what baffles me on this, and by the way, there's some financial television program, I'm not going to say which one it is, had a whole thing on Bitcoin as an investment and Bitcoin investors, and they're talking about investing in this. You're not if you buy Bitcoin, you're not investing. It's not an investment.
You're speculating.
You're speculating.
You're speculating on the price of an asset that is relatively new asset. Which, by the way, how are they assured that there will be no more Bitcoin mined after it's all run out? I keep reading this premise. I wish someone would explain it to me. Is it a promise somewhere that there is only a limited amount of Bitcoin that can be mined, which supports the price? What happens if they find a new vein of Bitcoin?
Don't ask.
New vein.
We thought we were all...
Right?
Well, look at all the other coins there are now.
Yes.
Who cares?
Yeah, okay. It just Bitcoin happens to be the one that caught on versus the hundreds and hundreds of others.
Which was a joke, and the market cap was that 100 billion at the peak or something? Dogecoin?
Yeah.
Whatever it was something astronomical. We talked about it a number of weeks ago in the program. But
and China now has banned Bitcoin mining because of the energy uses. Now they're going to make a stand.
Oh, they're green. They are green.
Now they're going to make a stand. That's where we draw the line. You can pollute the rivers and the country and the air, but energy consumption.
Well, there's one recommending Bitcoin in 1% of your portfolio.
Really? Like it's a commodity, like gold or anything else?
Well, Dan Egan, he's Betterment's vice president of behavioral finance and investments, said anything over 1% of a portfolio is an aggressive allocation, given that cryptocurrency represents just 0.5% of the value of global stocks and bonds.
Well, then why would you put 1% if it represents just 0.15%? Why 1%? That's all just marketing spin, Scott. That's all.
The question is, if something is 0.5% of your portfolio or 1% of your portfolio,
does it move anything?
No. I mean, hey, look at it, doubled. Oh, good. Now it's 2% of your portfolio.
Will it double again? And again, and again, and again, and again? And why did he choose Bitcoin? Did he say Bitcoin or did he say cryptocurrency?
Cryptocurrency.
Okay. Well, they are putting back packages or bags of cryptocurrencies together so that you don't have to buy just one crypto. You save yourself a lot of time. Buy a bunch of garbage all at one stop.
Yeah, well, this, I guess they're actively exploring cryptocurrency in IRAs and taxable accounts in a way that enables clients to do it in a responsible, advised manner, according to their spokesman.
A responsible in what manner?
Responsible, advised manner.
I wouldn't put it in my portfolio. My kids play it though, but they know it. They don't call it investing.
Do they still do? It's
they do the Reddit stocks, but you have to. They spend time watching Reddit to see what signs that the pump and dump people are ready to dump, and then they try to exit before them. So at least my kids. And by the way, they are my children. And I have a nephew that does the same. You'll never get the true picture because we only hear about the ones they make money on.
That's how it is all the time.
I guess that's
with everybody.
They're just like everyone else.
Yes.
Huh?
Do they do options and stuff?
They do. They do options as well. So, but my oldest son, who has lived through this experience of the options, doesn't do it anymore.
He already had a negative outcome?
Yes, he had and as I tell my wife, I'd rather them do it and learn at this age.
Absolutely.
Rather than have their, life savings betting on this. So
it's just the strangest of markets right now.
It is. It's lack of, first of all, there was too much time on people's hands. Way too much time on people's hands.
Well, last year, it was kind of the perfect storm when you had time on your hands, and then they had commissions right before the pandemic, where a lot of the major firms said that commissions on stocks and bond trades are now zero.
Yes. Yes.
So you can buy stocks with it doesn't cost you anything. And then the gamification, you look at like Robinhood, it's like you.
And then the government sent everyone a check so that they could actually use it to
buy cryptocurrency.
Or these meme stocks. Is this meme? M-E-M-E, meme stocks.
Not mean.
Meme.
Yeah, meme.
Meme stocks. So, different world.
Which is the craziest thing.
Different world.
And Wall Street Journal's got a good podcast on the whole Reddit and
how it works,
GameStop and AMC, just where it all came from, how it all began.
You know what's interesting? The most interesting about is somehow some of these companies have actually taken advantage of this and by issuing new stock.
Oh, AMC, yeah.
Yeah. I just thought these guys, they're not even really interested in what happens to the money they raise, the new stocks. They just know it's a great time to sell new stocks
AMC,
into the marketplace.
They were selling a ton of stock.
Yes.
Like, our price is so high, why wouldn't we sell our stock? The valuation makes no sense.
Yeah, which is just crazy.
Selling a bunch of stock? Well, using it to pay down some debt.
Yes. Yeah.
Perfect sense for them at that point in time.
Perfect. And it had nothing to do with them. They just found themselves in this situation because they happened to be a Reddit stock.
One could be so lucky, right?
Really?
You're a stockholder in some company.
Let's spend a minute talking about that. Why a company would actually sell stock to pay debt and why sometimes companies would actually take debt to buy stock.
Well, if you think your stock price is overvalued and you believe it's going to fall, which is obviously what they were thinking,
then
you could take advantage of this high price, sell the stock,
take the money,
and pay off your high interest loans.
Pay off your debt, right? But if you believe that your stock was undervalued and your cost of borrowing was really low, you would borrow money and then buy back your own stock.
That's exactly right.
And
share buybacks.
Share buybacks. And sometimes those share buybacks are financed by cash flow, but oftentimes they're actually financed by either balance sheet or debt issuance.
And they got a bad rap for a period of time, right? The share buybacks?
Yeah, well, because of the companies in the beginning of the bailout, we're talking about, well, look at these airlines were doing share buybacks, and now they're actually got their hand out looking for help. And had they not bought back their own shares, then they wouldn't need a handout. I don't know if that's 100% true. You can be a little bit irresponsible in your share buybacks, which means that you're not building a big enough buffer. But no one predicted a pandemic. I shouldn't say no one. Someone did. They just didn't know when. Right? We've been hearing about pandemics for years and years and years. And I always believed one would happen. I just couldn't tell you when. And so if you lived your whole life for the pandemic to happen next month, your portfolio would have done terrible.
Well, even during the pandemic, most companies made money.
That's right. Most companies made money. Most one. Entertainment.
I think one thing that's important thing is if you can think back to how you can't separate the two. I mean, it's good to learn from your own personal history of investing. There's no better lesson than your own personal history of investing.
How you acted.
How you felt, how it influenced you, impacted you during those times. And the financial crisis is one thing because it was purely a financial crisis that was caused by the financial system. The pandemic was very different because there was all kinds of emotions going around about it was just particularly in the early days, like where's this going to end with everybody? And
so it not only how did you react, but how did your significant other react in a marketplace? I have a much different risk tolerance than my wife does. Much different risk tolerance than my wife does.
My wife doesn't
pay any attention.
Pay any attention. Zero. She got a degree in finance. I try to share with her, like, here's our situation.
Oh.
No, she didn't care.
Oh. But
I guess it shows she trusts me, but.
Well, okay, that's actually pretty good. But I was talking to a couple 3 weeks ago. One of them has their portfolio is 90% stocks, has been for years and years and years and years, and the other equal size portfolio, all cash, and it has been for years and years and years and years. Years and years.
Cash.
Retirement
account in cash.
In cash, right? And so
waiting for
they don't. There's always going to be the time, but there is never the right time. That's what I said to him. I said, look, if you haven't find a buying opportunity in the last 3 crises that you've been in cash, then I don't think you're ever going to find it. So then your portfolio is going to be cash. Then we went to the next step. I said, what's this money for? And they couldn't answer the question. And they're talking about retirement, and I'm talking about doing distributions for them to live on, and they started fighting among each other.
That's weird. A couple fighting about finances.
And I'm a friend of theirs. They're friends of mine. I'm not their advisor. And I suggested to them, I said, you really need an advisor. And they said, no, we know what we're doing with our money. I said, I don't think you really do. And by the way, the reason you needed an advisor is a spending plan in retirement. Is a spending plan because you don't have any methodologies for taking the money out of your account. You had methodologies for putting it in, but every bit important is how you take it out.
Well, I tell you, it's when you look, for many people, it is more challenging when they move to retirement. They're no longer saving anymore, right? So at least when you're working, you're saving, so you're watching your account balance go up each month by what you're putting in. You're also busy. You're working, so you're not spending a lot of time. You go to retire, and you're thinking, oh, no, I got to make sure this money lasts me the rest of my life. So you got more concern about it. You've got a lot of time in your hands. And now you're no longer adding to the account. You're taking money out each month.
Which psychologically is very, very difficult for a lot of people.
A lot of people. And you see people make, you're more prone to make poor investment choices early on in your retirement.
That's correct.
I mean, which is, like, we've helped people as they transition to retirement for years. And I think that transition into retirement in the first couple of years is vitally important that you get set on the right plan, the right move forward. So anyway, unfortunately, we're out of time. I'd highly recommend checking out one of our on-demand workshops. We're going to have live events return again in the fall, but we've got some great ones. Our top 5 Social Security answers, one of our more common Social Security ones. Check that out. But we're out of time. We'll see you next week. This has been Allworth's Money Matters.
This program has been brought to you by Allworth Financial, a registered investment advisory firm. Any ideas presented during this program are not intended to provide specific financial advice. You should consult your own financial advisor, tax consultant, or estate planning attorney to conduct your own due diligence.